Welcome to Charity Chat Canada, the podcast that explores charity issues in all the subsectors of the greater charity world. Our goal is to explore the issues facing this dynamic and thoughtful sector so that others in the greater kindness community can learn and help each other better tackle our common challenges. Charity Chat Canada is hosted by Adam Aptowitzer, a charity lawyer practicing out of Ottawa. To learn more about Adam and this podcast, please visit charitychat.ca. You can also find a link to Adam's latest book, A Legal Guide to Running a Charity in Canada.
Hello, everyone, and welcome back to Charity Chat Canada. This is the podcast where we get the chance to speak with noted individuals from around the charity world, and we try to learn lessons from their work and apply them more broadly so that we can benefit the kindness world generally and hopefully the own work that we are doing specifically. We are very proud today to be here with Brent Barootes. He is the president and CEO of the partnership group Sponsorship Specialists, a sponsorship marketing consulting firm. Brent has worked with Canadian brands, charities, and nonprofits, helping them all to generate more bottom line revenue for their respective organizations through sponsorship. Brent is the author of Amazon.ca's #1 bestseller in the nonprofit marketing and communications category, Reality Check, Straight Talk about Sponsorship Marketing. Brent is a regular speaker at conferences and conventions across Canada, and Brent lives with his wife and 14-year-old daughter in Nanaimo, British Columbia. Beautiful Nanaimo, British Columbia, I should say. Brent, welcome.
Absolutely. Thank you very much. Thanks for having me, Adam.
Well, thank you for joining us. I should say right off the top that speaking with you is a little bit different than speaking with many of our other guests. We've tried to speak with people that had a very specific outlook on the sector that maybe applied a little bit more in a siloed sense. But it seems to us that the work that you do is actually very relevant to all charities across the country.
It really is. We work with small charities, as small as charities that have no employees, but just volunteers. And we work with organizations up to the size of organizations like the Salvation Army or World Vision Canada, those types of organizations, and helping them to figure out how to make more money to the bottom line to fulfill their missions.
Right. Well, why don't you start off by telling us a little bit about what is sponsorship?
Well, I think there's an industry definition and then there's a reality in the marketplace. And the industry definition for sponsorship is really when there's an exchange of cash or in kind between a company, a business, and a charity. And that could be a charity, it could be a nonprofit, and it could be pro sports, amateur sports, any of that. But in this case, let's look at just with charities. It's when a company gives a charity money and they're not looking for a tax receipt in turn, they're actually looking to create a business transaction. So they provide the charity with some money, and in return, they get marketing exposure associated to that charity for their own benefit. So they might put their name on a run or a walk, and in turn, they give money to that charity, and then they get the exposure that goes with that. So it's truly a business transaction. I think that's the important definition of sponsorship compared to a donation, which is, basically giving with no expectation of anything in return. So I think that's where the difference lies between the two of them.
So sponsorship is effectively marketing.
It truly is. It's, and it's true title. It is sponsorship marketing. We've, like everything else, narrowed it down and we call it sponsorship. Others might call it partnerships. Others might call it corporate engagement. But it is marketing, as a channel of marketing. And it quite often when a sponsorship marketing program is put together for a company from a charity, if it's really a comprehensive sponsorship marketing program, it will include different types of marketing inside it. So it might have some public relations elements. It might have some government relations elements. It might have typical advertising type assets, and it may have corporate engagement type of investor relation type assets. So a sponsorship marketing program is typically a comprehensive marketing program as opposed to buying advertising.
Right. So, but for example, it's distinct from a situation where a business wants to make a donation to a charity and gets nothing back in return. It's just, they donate some money to help out, but aren't asking for anything more than that.
So you're absolutely right. I mean, when a corporation just gives money altruistically and, here's $1,000 or $5,000, go do what you do. I trust you as a charity. I believe in the mission you're going to fulfill. Here's the money. Go do it. And that's a donation. And that's clearly, from your business and what CRA says that's a donation. But when a company says, here's this block of money, $1,000, $5,000, $500,000, but I'm not looking for a tax receipt. What I'm looking for is to hire more employees or to get more people to feel good about me or get the government to know that I'm doing good work in the conservation area or whatever it is that I'm trying to achieve business-wise, then that's when it becomes a sponsorship. They're truly trying to achieve a business goal. And it's interesting to watch because Imagine Canada for a few years has been running a survey, and I think the most recent number that I saw was last year 57%, or the previous year 57% of corporations surveyed had shifted from what they call philanthropy to sponsorship. And that basically meant that last year I said as a company, here's $10,000, go do what you do. And this year I said, here's $10,000, but you have to help me sell more hamburgers or more widgets or whatever. And if you can't do that, I'll find somebody that can and give them the $10,000. And that's been that big shift.
Well, then let me ask you a question then. Who actually sponsors? Is it, small corporations? Is it ever individuals with businesses? You see the names of large corporations on runners or on in brochures, but who exactly is engaged in sponsorship?
Well, I would say from our experience, and I mean, we work coast to coast in the country, every community will have large sponsors. You go to Atlantic Canada, yes, you're going to have the McCains, you're going to have the Irvings in their different divisions, whether it's Irving Oil or Kent Building Supplies or whatever. And you go out west, and yeah, sure, you're going to have in Alberta and Saskatchewan the pipelines involved, and you're going to have the financial institutions in every province, whether they're credit unions or the big five banks, or all the banks for that matter. So they all end up in a scenario that those big companies are there, but also the little ones, whether it's, it's a walk in a small community in Melville, Saskatchewan, and the end result is that, they've got the local drugstore, and that's the local PharmaSave, and that's the franchisee's money. That's not the corporate franchise money. So all of them are involved in sponsorship. The interesting part, though, Adam, is that we always hear from our clients, the charities, saying things like, oh, well, that company just wants to help us out. And I find in most cases that when the charity sits down and says, sure, thank you very much for your $5,000. We really appreciate it. And we'll get you a tax receipt for that because you said you wanted to help. And the company says, yeah, that'd be great. I'll just send the tax receipt to me. That'd be great. And I'll get the banner made up because I'd like a banner and I'd like also to speak on the stage. Is that okay? And the answer to that is, no, it's not okay. You either get a tax receipt, a charitable tax receipt, or you get exposure. But you basically really can't have both because Canada Revenue Agency says one is sponsorship and one's charity. And I can't give you exposure and also give you a charitable tax receipt. So when it comes down to it, most of those companies I find, especially the little ones that say, I just want to help, when it comes down to it, push to shove, the tax receipt isn't that important. It's, I want to sell more groceries or whatever it is.
Right, and our listeners should probably be aware, of course, that where an advantage is returned to the donor, they cannot issue, the charities that is, they cannot issue a receipt for the full amount of the cash transfer to them if the donor is getting an advantage. I think the difficulty for many people is valuing that advantage. And what is it worth to a corporation to have a banner up and have their name on this or speak from the stage? I mean, I think that's a good example. It's very difficult to pinpoint that and value it. I know how I usually deal with it in my practice, but how do you folks usually deal with it in yours?
Core of our business, that charities will engage us to help them first to figure out what they actually have to sell, and then what those assets are worth. And I say engage us, but I mean, I want to be really clear. We have lots of competitors in the country, and there's lots of companies that can do this work. So there is standards in the sponsorship industry. If a charity says I'm going to put the sponsor's logo on my website on a sponsor page, and they're going to get their logo there with a click-through, there's a derivative to determine how much that is actually worth. That's accepted standards across the world, and those are worth about 1/3 of a cent times the number of unique users that go to the website. So everything can be calculated down to the penny. Everything from a speaking engagement on a stage for 2 minutes, to a tweet, to a logo on the website, to a behind-the-scenes tour at a production like Cats at, say, Theatre Calgary or Ottawa Little Theatre or something like that. So when we start to look at those elements, they can all be pinpointed right down to the penny. And those are the numbers that are accepted valuations. I mean, when we do the valuation, we use those numbers the same as our competitors do. And then we'll also do, we've been in the business a long time, so we've got a lot of clients, and we've got a lot of history, and we've got a lot of data. So we can go and compare to what this theater company is getting, and that theater company is getting for behind the scenes, and that theater company. And we can use that to attach along with the straight derivative quantitative eyeballs type numbers that can be derived. And those, there's a lot of companies in this country that, they use those numbers. They're very possessive of them. And then there's other ones that, like ourselves and a few others, that'll share those numbers. And you referenced my book earlier. It costs, I think the book is $45 or something, shipping, handling, taxes, everything in. But the real key to that is if you hire a company like us or any of our competitors to do that valuation work, we're thousands of dollars. Like, we bill out at $3,000 a day. So that's expensive. But you can access that stuff probably by doing a Google online and finding valuations. Or you can, my book, there's Kim Skilden Reed has a book out, and we all share those numbers in there. So there's lots of places you can pull that data from.
Right. And from my experience, my practice, it's a very difficult assessment to make for most accountants or financial professionals that don't have specific expertise in making these kind of valuations. Of course, the consequences to the charity of getting it wrong are severe, because it is an offense punishable by revocation to issue a receipt that is inaccurate. So it's an important matter for the charity. But on the flip side, for the corporation, it's quite an interesting conundrum. If they were to give $10,000 to a charity and they were to receive marketing benefit of, let's say, $8,000, then that $8,000 is not receivable but it is still a business deduction to the corporation as a marketing expense. The other $2,000 is not deductible unless they receive the receipt. But if they do receive the receipt, it's also a deduction. So whether the charity were to receive a receipt for $10,000 or to receive a receipt for $5,000, the other five assuming to be marketing expense, is the exact same result. And so, from the perspective of the corporation, and from a tax perspective at least, it's not as critical, which I always found interesting and something that the CRA knows, of course, and I think colors their assessments of the situation, knowing that at least from the corporation's perspective, the proportion of each expense to the total amount given still results in the exact same tax result. So at least from that perspective, there's a bit of a safety net.
It's actually, and I'm not an accountant, I'm far from it, and I'm not a lawyer, but it's my understanding that you're absolutely right. When that company, if contributes $10,000 towards a charity, and the assessed value of the exposure they're getting, as you defined, is, say, $5,000, they can write that off as a business expense. And the second $5,000, as you point out, would then be a charitable gift. So because it's above and beyond, there is no recognition for that part. But they can't write that off as $5,000. Typically, they would, like you or I with our personal income tax, they can claim a tax credit for about 17 cents on the dollar, 17%. Of that 5,000. So there is a large differential between the two of them. One is a $5,000 write-off of operating expenses, which lowers your profit levels, which means you pay less taxes, versus 17% of $5,000 that's a credit against taxes owed.
Well, of course, then we're getting into the distinctions between businesses run by corporations or by individuals, and I'm not sure my listeners are interested in hearing the ins and outs of the tax act, or at least I'll save that for another podcast. Well, let me ask you this question then, and maybe we should take an example. My question was going to be, how do you attract sponsors? But why don't we take an example? I will use this opportunity to get free advice. We, as our listeners are, of course, and our goal around here, of course, is to carry on this podcast in as honest and transparent manner as possible. But of course, we are interested in sponsorship of the podcast. How would, while I'm not a charity, I think the principles are probably the same. How would I go about getting a sponsor for this podcast?
Really good question, and I think as you analyze it there, or sort of mentioned there is a similarity. I mean, you're both looking for sponsors, whether you're a charity or whether you're your business practice, or whether it's a municipality or a pro sports team. And the reality is sponsorship is the same to all of them, because the company is saying, where can I get my best return on investment? So if I've got $5,000 to spend, can I get the best return on investment giving it to the Juvenile Diabetes Association at their walk, or can I get it by giving it to Adam around his podcast, or am I better off to spend that in the Ottawa Citizen newspaper? Where do I get my best value for return or return on investment? So what we always say, there's a couple of places we tell our clients to go when they're starting to look for prospects. And the very first one is to check your check ledger and figure out who you're spending the most money with, other than your employees and payroll, because quite often they don't want to, get paid in sponsorship. They want to get paid in cash. It's really hard to pay your mortgage with
usually,
Yeah, so take out the payroll, but look at where you're spending the most money. Vested interest in you growing your business. So we always tell our clients, look and see who you're spending money with, and then go rap on their doors, because they need to invest in you so that you can grow your business. But if you have an audience, typically they want that audience as well. So that then comes to the second place of where to figure out who you should be calling on. And the most critical element of that is, well, typically what a lot of organizations do is they go after the big banks because the big banks supposedly have lots of money. And then they go after the big corporations because they all have money. And we try to discourage that. We try to say the very first and most important thing after your vendor list is to look and find out who your audience is. Like, who are you trying to reach, or who do you reach? So if you are this podcast, and I was helping you, Adam, to find out who you should call on, I would say, who's on your podcast? Who are the individuals that work for the charities that are listening? Are they a high income? Are they board members that are listening? Or are they staff that are listening? Are they CEOs, or are they development officers, or are they event coordinators? So it's understanding who your audience is. And then your audience is not only people, but in your case, it's organizations. So then who is it that's trying to reach those organizations? So what organizations are trying to reach your audience? So if we look at something like a walk or a run, you would need to know who's in your audience. Who is those people? And if it happens to be, 40% of your audience is 18-34 male skewed, then think about it. Who is it that's trying to reach 18 to 34 males? And maybe another 40% is 25-49 females. Now, who's trying to reach them? Or you may look at your audience as people. I found this really interesting. I was just at a conference, and the MS Society, they do their bike in Ontario, and on one of the big bikes that they do, when all of the people took off, it's an overnight bike ride. They ride for 8 hours, stay overnight someplace, and ride back. Well, in the parking lot where all the bikers left, the MS Society sent their staff in to the parking lot and record every single vehicle that was parked there, because the only people parked there were people on the MS bike. Now if you have 300 people in that bike, and 60% of them are luxury cars, Beamers and Mercedes and Lexuses and Infinities, and in this case they knew exactly what brands as well, then you know where your audience, the wealth of your audience, versus if it's a whole series of pickup trucks or it's a whole series of compact cars. Now you get a better idea of who your audience is. And once you know who your audience is, then you can start to figure out who you should call on strategically, rather than that old-fashioned process of throwing the spaghetti against the wall and hope something sticks.
Well, I mean, what you're saying is a perfectly logical business way of operating. Find out what you have to sell, and then sell it to the most willing buyer. It sounds like that's what you're proposing.
You nailed it, and you said it's common sense. And I can tell you that most of our clients, and I'm going to say including myself, and I'll give you an example, fail to follow common sense when it comes to going out on sponsorship. When our neighborhood, and when I lived in Calgary, was doing a block party and my wife was sitting on the organizing committee, you can imagine who got stuck in doing the sponsorship, right? And I'll never forget, I thought, okay, I'm going to build some bronze, silver, and gold packages, and I figured I would just take those bronze, silver, and gold packages, and I would go to the strip mall down, one way from my house, and I would go to the dry cleaner there, and I would go to the little, the Chinese restaurant, and I would go to the alterations lady, and I would go to the doctor's office that's in there. Then I'd go to the next strip mall that's 2 blocks over, and I would leave these packages there, and I'm sure they would look at them, and they would purchase them, and they would buy them. And I would come back 2 weeks later and there'd be a check there for me. I mean, we all believe that's how we start out. And I tell our clients, it's the stupidest thing in the world to do. It's like I used the phrase earlier, throwing spaghetti against the wall and hoping it sticks. And I actually started to build those packages thinking that's what I was going to do. I fall in the same trap as everybody else. Then I kicked myself And I looked and I said, okay, we live in a neighborhood that has 80 houses and these 4 cul-de-sacs. And of those 4 cul-de-sacs and 80 houses, over 50% of the owners in these 80 houses are original owners. And these houses were built in the 70s, and this was, mid 70s. So we're talking almost 20 years or 40 years later. So the end result was I looked and I figured it out that most of the people that were original owners were either going to pass away or move into old folks' homes in the next 5 to 10 years. So I said, who wants to talk to those people? And that was realtors, because those houses are going to go up for sale in the next 5 to 10 years or in the next little while. So I went and told a realtor, we have 80 houses with this audience. Are you interested? He didn't ask how much it was. He just said, I'm in. And then I told him how much it was, and it wasn't a lot of money. It was $500. And he was our sponsor. But I knew who needed that audience. And ironically, he did sell 2 homes with people he had never met before. And he ended up doing quite well on both of those sales.
Well, that's not ironic at all. That's entirely planned by you. And I guess when I said common sense, a lot of times the theory makes sense, but it's the practice which requires experienced execution. And I guess that's what you bring to the table. So let me ask you this question then. What are some of the trends in sponsorship? Are there trends, or does it just be is it purely an economic relationship that just is going to have to make sense for the right partners?
There has been a lot of trending in the last, for sure over the last 20 years, and even more so in the last 5 or 7 years. So in the last 20 years, we've seen a large shift in the Imagine Canada statistics that I gave you earlier clearly show it that basically 1 in 2 companies in Canada annually are shifting from corporate philanthropy to corporate sponsorship. And when you listen at the AFP Toronto Congress every year, for all the years that I've ever attended, Marnie Spears would get up and she would speak from KCI's perspective, and she always says the same thing, and she's right. Individual giving is up and corporate giving is down. Well, corporate donations are down because that's what's tracked by Stats Canada. But the amount of money that corporations are putting into charities continues to increase, but it's going in on that sponsorship side. So that's one of the big trends, and we should all be aware of that because that means there's money in the marketplace for us. Then that trend is that shift from corporate philanthropy of, here's the money, you're a wonderful organization, keep doing what you're doing, send me a tax receipt, to, I have this money for you, but you have to help me with my business objectives. So that's probably the biggest trend, and it's been ongoing and will continue to go that way. The other couple of trends that we've seen in the last few years are really very much important to constant growth. And one is that the number one complaint, according to the Canadian Sponsorship Landscape Study, by the brands, by the sponsors, the number one complaint about proposals is that they're stock proposals. They are those gold, silver, bronze packages. They may not be called gold, silver, and bronze, but those packages are templated. And what the brands or the companies are saying is, we want them customized to our needs, because how in the world would somebody like EB Games that has an audience of 1834 or 1434 males, how would that same package be of any value to Reitman's if they were, going to do a sponsorship with you? If everybody that's coming to your event is male skewed and you're talking to Reitman's and you've got a package for them, it's not going to work. So you need to be specific and customize packages. And so that's been one of the big trends. And we're seeing more and more of companies just throw them in the garbage. And we had one fairly senior person from a financial institution in Canada say, if they can't take the time to take the word sampling out of their proposal and give me the right to sample, which is, the right to hand out product for people to take away and try, like at Costco. She said, if they leave in their proposal that I have the opportunity to sample, I throw it away. Because what am I going to do? Stand at their gala and on the way out, hand out $5 bills? That's our business, is money. So it's of no value to me. So if you can't take the time to customize the package for me, I can't take the time to look at it for you. And we're seeing that's the second trend that we're seeing. It's becoming, brands are getting pickier and pickier. The third big trend, and this was also just in the most recent publication of Imagine Canada, that proprietary and focused programs are being done by brands. So, Scotiabank is into hockey, CIBC is into breast cancer, and each of these organizations have focal points, and that's where they're funneling their money. And so we're seeing a shift of less charities getting money, but the appropriate charities within that sector or that grouping that company is focused on, they're getting more money than they ever have. So that's the other thing, is to know where you fit in the niche. And if you're a youth organization, you need to be barking up the tree of those sponsors that are interested in supporting youth or seniors or post-secondary education or whatever it is, but don't be going to talk to somebody that doesn't fit. So those would be probably the top three trends that I'm seeing in the marketplace right now. There are a few others, but they're more, things like digital. Sponsorships need to be more digital. Hanging a banner doesn't work anymore, but, opportunity to be integrated into video or tweets or social and digital media. Those are the things that are of interest to sponsors.
Yeah, that's quite fascinating. And, we've reached the end of our time, but just to add an extra little anecdote, I, on my side, see sponsorships, on my side, of course, being in the law field, I get approached by organizations, typically charities, although not exclusively. Sometimes they're families looking for naming rights. And I think that's it's anecdotal, or at least it's analogous, because these places, families are prepared to give money and want the benefit of having their name attached to whatever it is for the long period of time. And what's interesting about it to me is that there's lots of room for negotiation and interesting add-ons and sweeteners that make it valuable for the family or the corporation, and which is basically no skin off the charity's back. Just to give an example, I was dealing with one organization that was building a building that was going to be named after a donor here in Canada. It was overseas, and the donor couldn't be there to see the building being built, but was really interested in it. And so the deal struck involved the setting up of a webcam for the donor to be able to see the building going up. It's not sponsorship exactly, but it relates back to the larger concept of having the name attached to the endeavor of a charity and working out some sort of an arrangement that doesn't have to be this sort of typical gold, silver, and bronze, as you say, but allows for some creativity in meeting the needs of the donor and really not costing the charity anything more. I don't know if you want to respond on that.
That's a perfect example.
Yeah,
that's a great example, I think.
Yeah, and it's from my perspective, I enjoy constructing those kind of deals, and now I see some of the attraction in the kind of work that you do. So maybe when in my next life and looking for a new career after my podcast career, assuming I have a podcast career, I'll come and chat with you. So anyways, Brent, thank you very much for your time. We appreciate it. It's been enlightening for me, I'm sure for our audience as well. And I hope that anybody that has any questions about sponsorship or any part of what we've spoken about today will reach out to you, read your book, and again, which is called Reality Checks. Do I have the full title? Sorry, I don't have it. Reality Check, Straight Talk about Sponsorship Marketing, right?
That is correct.
Excellent. So it's a worthy read and definitely a worthy podcast. Thank you for speaking with us.
Thank you very much for having me, Adam.
Thank you for listening to this episode of Charity Chat Canada. Please visit our website, charitychat.ca, where you'll find show notes, related articles and links, and details on how to contact us and where to find our episodes. Until next time.